Hey, greetings. Dr. Jeffrey Scott here, and this is the Market MRI Pro update for Monday, February 2nd, 2026. Well, it matters where they close, not where they open, and we saw that today as markets staged a broad-based rally off the overnight lows. I talked about that a little bit on my Sunday video. Kind of was surprised at how much the market sold off, and frankly, a lot of people on YouTube were thinking the market was going to crash. But we're still in a buy signal on the weekly, and that really didn't fit. Again, my name is Jeffrey Scott, marketmripro at gmail.com. Google Group's called Top Down Trader, and my website's marketmripro.com. This and all my videos should be taken for education purposes and not investment advice. I do these videos to teach people how I use my tools to do top-down analysis. Trading involves risk. You are solely responsible for any investment decisions you make. I'm the owner and intend to buy or sell any stock mentioned in this report. Trading stocks and options should be considered risky. You should always consult with your financial advisor before making trades, and I have tools in multiple platforms. My Google group is called Top Down Trader. You go to Google Groups, go to all groups, and you sign up. Let me know how you want to be contacted. I'll give you a reason why. Well, let's say you didn't come live to my meeting that I did on Saturday. Had pretty good attendance for a Saturday, to be honest. Um, I did two sections. I did sort of a review of how I got here, sort of my history, what I've learned from some smart people, and how I use it and why I use it. And then took a break, and I came back and we talked about selecting the option spread that would make sense for to me based upon stocks I was finding. And there's 5 or 6 option spreads that I like, which have defined risk. Some have unlimited upside, and they're all relatively cheap, which is what I like to do, so I can take lots of trades and have high deltas, meaning high likelihood I'm going to be finishing the money, but not go broke spending money on the trades. But you only got that if you went to the Top Down Trader group. And we also included in the Top Down Trader group a copy of my slide deck for both videos. All you got to do is when you register, just go into the site and look for the video, the letter sent from me on Saturday that will have all that material. I'll do another one of those in about 6 weeks. I enjoy doing them. I enjoy giving back and teaching people the things that I learned from some what I thought were brilliant mentors. The other thing is I did suggest a deal. The new price on Market MRI Pro is $26.95. We've added features. My costs are my costs, and I know every product on the market because I kind of own them all. And we think that it's still at a good value price. But I offered it at $19.95, and it may be the last chance for those of you that have bought my tools and other platforms to get $200 off for each platform you bought it in. So if you bought my tools and wealth charts, you get an extra $200 off. If you bought them in Metastock, $200 off. If you bought them in TradeStation, $200 off. And if you asked, you'll get $100 off because you're a top-down trader member. So I've got a lot of people that have 2 sets of the tools, so that's 400 plus one for top-down trader. That gets you down to $14.95. Price probably will never be lower. So a reason to be in my Google group. News and earnings, job openings for um, December likely not coming out because of the partial shutdown. ISM services will be out at 10 a.m. And on Monday, ISM manufacturing came out extremely strong, which just shows that the economy is humming. And maybe that's why over the weekend I saw Robert Half on the old On Assignment and other entities that are involved in what we call HR had spiked a lot on Friday. Earnings after hours today, it was mixed. I'll give you some sense of that. Let me just call up my trusty source for earnings and response. So, all right, we'll start with Teradyne. TER, big move after earnings, up 22.3. Wolverine Worldwide, or no, Woodward, WWD, Wolverine Worldwide is 3Ws, is up 15.8. Palantir was up as much as 10. It's currently trading up 5%. Wolf, I don't know if Wolf had earnings. I think they had some news that is up 12.3. Now, on the downside, just to show how hard this is, Rambus is down significantly. There's Rambus, it's down 14.7. NXPI Semiconductor is down 5.2, and Fabrinet is down 4.1. So mixed earnings. Market rewards winners, punishes losers. It is a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. Any questions for me? You can't find the links. You need my layouts in Metastock. You have questions about any of the platforms where my tools are in, which are Metastock, Wealth Charts, TradeStation, TradingView, my trading app. I think that's it. Reach out to me at marketmripro@gmail.com. If you have any issues installing the program or issues with the program, coding at marketmripro.com. Now, if you're on the edge and you really want to try it out for a trial, you just go to the Windows Store, look for Market MRI Pro. I think it'll charge you like $7.95 for 3 days. But you pay the $7.95 and you email me, and I will extend that to 30 days, and I will give you a copy of my PowerPoints that show you how to use the program. So I think that's a fair deal. $7.95 for 3 days was a little steep, but I'd like to get you in the program. If you like the program, I want to give you a chance to figure that out. So that's the deal we have right now, and consider joining my Google group. So today, big difference. Now, if you look at where we opened, now, those of you that saw my video last night saw that the futures were down big. They'd already recovered much before the open. You could see that the diamonds opened up, or they opened up down a bit, and they ended up 1%. The Russell opened up down 0.45, ended up almost 1%. The Qs opened up down 0.5%, ended up 0.69%. And then the spiders opened up 0.35 down and ended up 0.5. So pretty nice reversals across the day on each of them, and some got a little bit worse before they got better. Now, there is a bad data bit on Spider, whether you look at Metastock, TradingView, my app, and I just checked those and said it's not me, it's whoever we get the data from. That'll be fixed overnight. I'll show you when we get there. Volatility was down almost 5%, and Bitcoin was down 6.89. It was down a little bit more, 7.39 was the low of the session, and 6.82, kind of where they finished, was where they opened. So Bitcoin still remains challenged with lots of calls for further falls. If we look at the new high, new lows, we increased the 52-week new highs minus new lows on the NYSE. We're still a little bit above break even on the NASDAQ. Participation today was much better. 65% of the stocks in the NASDAQ advanced, 65 in the S&P 1500, 56 in the NASDAQ, and 58 in the NYSE. That's a modestly bullish day. We look at what led. It was industrials, staples, financials, and tech. Okay, that's a mixed bag with defensive and offensive. What was weak? Energy, sort of de-risked with the Iran situation diffusing a bit. Utilities were down, real estate. So for the most part, it was defensive things down, and therefore offensive groups up. If we look at themes, transports, all-time highs. Biotech had a nice recovery. Retail, cannabis, infrastructure, leisure entertainment, semiconductors were all up more than 1%. And if we take a look at what was down, big loser, oil, gas exploration, uranium had another weak day, blockchain, artificial intelligence and robots, MLPs, energy infrastructure, China discretionary, all down about 1%. If we go into the timing model, here is the bad data bit. Now, unfortunately, I can't change that to the SPX for the S&P 500. But from a trade timing perspective, you could see that the Qs remained red on the daily, as are the Russell, both of which had great days taking out their moving average but not flipping their bongo, while the Spider and the Diamonds are in buy mode once again. Spiders never flip to sell. On the weekly, last week we ended the week with everything positive, but the Qs had turned red on the bongos. We're still everything's positive. These are weekly charts. Let me fix that up. So, you know what? Don't we all feel a little bit better about the markets today? We'll see if it's warranted or not. If we look at the index ETFs, this one I was able to change to the index instead of the ETF. So let's just take a look. So the Spider bounced off of the 17. Um, Neutral to positive seasonality. It's above the 17, the 21 EMA, the 50, the 100, and the 200. I think it looks great. I still bullish. Q's full down into the 50 and bounced, had a massive day up. Like the Spiders, still look to me like for the next few days they go high. And sometime around the 17th of February, we start to get to a negative seasonality period. If I look at the Diamonds, the same story. Big reversal day today. Looks great until we get to the middle of the month. And lastly, the Russell had a nice reversal candle today, was up 0.97. Certainly looks better than it did over the weekend, but is a little bit further off of all-time highs than the others, although they hit all-time highs just a short while ago. If we continue on our journey, VIX still trading above this trend line, but reversed all the way back down to it after opening higher. And then the US dollar, which I think it's spiking because of the new Fed president announcement. And I think that unless the bonds start to sell off and the rates spike, it would mean that the bond market's okay with him. And that's important if you're, I think, from a long-term perspective. Well, we did see some changes today in commodities or continuation. Gold looks like it's heading to the 50. Gold had another down day after being down on Friday 10%. It was down another 4% today, and 50 is probably on the way. Climax run and breakdown. Same thing on silver for the most part. Was down even more, 28.59 at the close. Continued lower, another almost 4% today. They're in range of that 50. Now, it'll be interesting what happens at the 50. Is it possible that they bounce off the 50 and go back and try and fight for new highs? They could. I don't think so. I think there's been too much short-term damage. I think they need to base a little bit, and I'm not sure silver ever gets back there. Oil continues to do okay. Today it was, I'm showing up 0.48, but you know what? That is not today's candle. Here's today's candle. As I said earlier, oil was down because of the reduced tension between the U.S. and Iran and the Straits of Hormuz, and therefore oil was down 5%. Now seasonality still looks good, but obviously oil is heavily leveraged to what's going on in the world at a given time. And then natural gas, boy, if you own Boyle, I feel bad for you because natural gas was down 24% today, which means if you're in a leveraged ETF, you were down more than 50%. And you can see natural gas tanked. Why? Because it ran up with this cold front, and now they're projecting warmer weather than usual going forward. If we look at 10-year did go up a little bit today, 0.85%, and the 30-year, same thing, up 0.78. So yes, we've gone up a little bit in yield, but how much of this wasn't because the markets felt better today and they weren't running to bonds? In fact, were people selling some bonds today to buy stocks, and that could cause rates to go higher if the bond price dropped with supply. Already looked at gold and silver. So the next one we're going to look at is the buckets. And you can see the gray shows you had more below over the weekend than we do now. and the green over the gray shows you we have more above than we did on Friday. Still kind of a neutral picture. Market breadth, you'll have to excuse me that I don't think this data is finished. I did recently look at the Q market breadth from my buddy Sagar, who somehow is using AI to do the videos. I got to figure that one out, although I think it loses some of the personal touch. But I'm just a 68-year-old curmudgeon, so I'm probably not the world's best expert on the use of AI for doing videos on YouTube. I and so my concern here is that he saw the third Hindenburg Omen today, and I think it was on the NYSE or the Nasdaq. I can't remember which one it was on. It was on its composite, um, which is a combination of the two. So there might be another Hindenburg. It doesn't really matter. We got confirmed Hindenburgs. Let's look at it from a bullish perspective. We got big white candles on both sides. Now let's look at it from a bearish perspective. We got big white candles on both sides. We have not updated this chart yet, so I don't know, again, where we're going to fall on this guy, the 13-week high low, but it doesn't move that much, so I expect it's neutral. And we still might see something new popping in from the perspective of the Hindenburg. But open lower, closed higher on both, traded up into resistance, closed a little bit below that on both of them. And we will see when it updates. And if there's something that's a significant change, like if we saw a Eureka or something, I'd get back on. But I think right now, strong day, still have those Hindenburgs to keep in the back of our mind. But I think it's time to perhaps put a little bit more in the market, which I did today. And I did it by covering some of my short positions. I have to put money in to cover them. And it wasn't short stocks, it was put protection on some of the things that I had bought last week. All right, if we look at the larger market breadth tool, again, we're still waiting for the last update, and got the same thing here on the spider. So not much to say here except it was a pretty good day. If we look at the sectors, let's blow these up and flip through them very quickly. Bitcoin, you could see the damage in Bitcoin. It actually traded up during the day from, I guess, the overnight, maybe where it ended on Saturday night, but still a lousy position for Bitcoin. If we look at technology, it's in a sell mode below the yellow, really doing nothing. If we look at discretionary, at least it's above the 50, and technically it's in a sell signal below the moving average. Not that exciting. Communications did pop, especially with Netflix's earnings. Apple's done a little bit better. It didn't do much today. It's still in a buy. Industrials turned it on again today, taking out, let's see if this will even work here, that recent high, and I think industrials look good right here. What do we have here? Financials, they've bottomed, but they're still in a sell. Need some more proof. Energy pulled back a little bit after a big run. Here is materials holding up on a buy signal still. And here is real estate, neutral to bearish right here. And utilities, I would say the same thing, neutral to bearish. And staples, very strong. Big run, sort of an upward flag, and then a breakout. Healthcare, neutral, bearish, although we know LAB did well, biotech, that component, and it was back to Bitcoin. All right, let's look at some of the key stocks that we look at every night, and a couple of my favorite industry ETFs, which are probably due for at least one of them to be changed. Blow that up. Amazon, super strong day, up 1.5%. Its earnings are later this week. Be careful with it. Apple took out its 50. Oh my God, Apple looks great. takes out the 50. It's got in a buy signal, not extended, relative strength taken out over the spider. That looks wonderful, except it's got earnings coming if you don't already own it. Google has been wonderful forever. I just listened to Cramer say the Magnificent Seven are dead. Well, certainly not Google, but the dead ones are coming. Meta, I thought was dead, and then on earnings and despite a lot of CapEx, it had a big gap up. It's just doing some backfilling here. I don't think anything nefarious. Netflix is dead to me until they sort out the Warner Brothers and the Paramount issues, and the stock starts to go up. Wouldn't be touching it right now. Tesla, a lot of weird things. Let's get rid of the X and the S and build robots. And I was more likely to buy an X again than buy a robot. And then tonight AI and SpaceX merged, so that's not merging into Tesla just yet. So that's probably a disappointment. Neutral. Nvidia biding time until they get earnings. Neutral. Microsoft, doesn't matter what the market does, it just keeps going down. Not a good place to be owning. And then LABU, now you look at this, you look in hindsight and you go, dang, it was a good place to buy on Friday. And look at the move it had today. And nice rebound on LABU in the markets on Monday, up 6.26%. Continuing on, pharma holding, looking okay. And then data centers pulling back the last couple of days, but they've been performing well since that breakout. All right, and ITA, time to move on to somewhere else. But ITA was really hot. We took HWM. Now, this will sound horrible. I'm still in it, except I'm in it with a put. When it ran up, I bought a put, and then it came back down. So I'll be thinking soon about closing the put since it gave us a doji there. All right. Now, looked at the markets. We looked at a bunch of industries. Let's go to my top-down view. Just go to layout and broad-based move. So we'll leave the big list in. We got 37.96. And here's the sector performance for all those stocks combined. Let's just look at 5-day momentum. And we got staples, financials, and communications at the top. All right. And then let's rank these by 5-day momentum as well. These are the top 10 industries in those top 3 sectors. 1, 2, 3, 4, 5. And that gives us 396 stocks. The first thing I do is I put a $5 filter in 500,000 shares. Got to be above both of those, and now we're down to 216. And as a good top-down trader, I start here and maybe rank them by number up impulses. Start going down the list. Williams Sonoma, pull back here, high base and breakout. Earnings are not to March. NFBK, Northfield Bancorp, we talked about regional banks being strong. This was on earnings today, and we can look here and see the earnings weren't even that good, minus 69. It must be what they were talking about. Columbia Financial, another one. Don't know anything about, it's Western Union. I'm sorry. Yeah, I know about them. I don't use them. Visa, a big day off the bottom. Target, looks okay. I think I showed you last night that I'm a fan of Walmart here, and Walmart had a nice day breaking out. I think Walmart looks interesting going into earnings on February 19th. Sally Beauty Holdings, kind of a sideways move to me. So one way you can do this is just going into the program and setting up your top down. You might do it by percent, and it's whole different stocks, industrials and cyclicals and healthcare. Do this by percent, rank them 1, 2, 3, 4. And what you'll notice is you got heavy medical here. So Twist comes to the top, and they had a nice breakout on earnings today. BTRS, Beatrice, nice pattern running up. What do they do? Are they the generics? Let's see, biosimilars. Yep, generics and biosimilars. Okay. Siga is a monkeypox company, really got beaten down. So you could go through this and see if you find something that looks good. I think Maze looks really good. Little base and maybe a chance to get in. Just another way of doing top-down investing. And then let's kill all these, kill these, and let's go take a look at into the impulse. Let's take a look at my A pluses. Do we have any? Sure we do. XPOF, Exponential Fitness, don't know anything about it. My wife would say just look at my body, she could tell. Relative strength of OBV look good. Volume breakout momentum from a squeeze. Yeah, it's going to be extended, but who cares? It's sitting on the 200. That looks really good for tomorrow. MRK, we talked about this one last night and looked through a carry through with a nice breakout, but it's got earnings tomorrow. McKesson, I specifically mentioned this last night as a good place to hide if we see increased volatility, and it still looks like a good price. Inva, I don't know if I showed it to you, it's on my buy list. Innoviva had a big breakout today. FFWM, First Foundation, ARCB, ArcBest Trucking, and APAM all ended up A plus. Now, if we look at the A's, we're going to probably see a lot more, and almost too many to look at. But this is how I go through the market so far. I think if you had to push me to buy something tomorrow, I think Merck still looks great. I think Inva looks great, and I think XPOF looks really good. What else can I show you? We developed a new scan during the webinar, and I kind of like it. It has a lot of, well, first of all, here's the picks that it chose today. Not a lot of red ones in it, are there? No. So it really picked some winners today. So now we ran the scan forward for today, and let's just rank it by up dots. And there's Twist, Williams, Sonoma, pull back, breaking out. WMS Drainage. I like this one a lot because it's sitting right on the 50. It's got good seasonality, relative strength and OBV taken out. I think I could get behind this. You can see the recent pullback in the uptrend. We already looked at this guy. PKST, Peakstone Realty, looks interesting. So I think there are a lot of things that are popping up. Dicom even looked good today, and that's been a dog for a long time, but pullback and a breakout. Be careful what you're doing. I think this market could still whipsaw you, but there are some classy setups. I showed you a couple of them and how I find them. I think this market is, I think it's going higher. I thought so on Friday too, even though we had what looked like liquidation. There's a reason why the weekly model is still in a buy. We'll see you tomorrow.